This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Data deluge, a raft of new numbers, suggests the economy might not have what it takes to kick into top gear. Critical decision, will they cut or won't they? OPEC members gather to answer that very question about oil production, and some are calling it the most important meeting of the organization in years. And the Christmas creep. The pressure to get holiday shopping started is coming earlier and earlier every year. But is it worth it? All that, plus a drumstick, for this Wednesday, November 26th. Good evening, everyone, and welcome on this Thanksgiving Eve. Susie has the night off. It was a quiet day on Wall Street ahead of the Thanksgiving holiday, with a winter-like storm blasting the East Coast with snow, sleet, rain, and temperatures that would freeze anyone's giblets. But gobblers, they gobbled up enough stocks to push the Dow and the S&P 500 to a new all-time closing high, and the NASDAQ to a fresh 14.5-year high. And this happened despite another slump in oil prices and a flood of economic data that was as soggy as the weather. Steve Leisman takes a closer look behind the numbers and what they may mean for the economy moving forward.
The weather turned sour ahead of the Thanksgiving holiday, and so did the economic data. A feast of economic reports, released earlier than normal due to the holiday, mostly came in below expectations and raised doubts about whether the upbeat economic data from the third quarter is continuing into the fourth. Business investment fell in October when the street was looking for a gain. Jobless claims spiked up by 21,000 to register the first read above 300,000 since early September. And lackluster housing data came along with a lukewarm report on how much Americans spent and earned in October. Still, economist John Riding remains optimistic.
We're 5.5 years into the recovery. One wouldn't expect it to be booming at this point, but the economy is advancing, and it's advancing when you compare to the difficulties Europe are dealing with, or you compare to some of the countries in Asia. I think the state of the expansion's in fairly good shape.
But it's hard to argue after today's data that we're headed for another plus 3% quarter of growth. More likely, the U.S. is on track for an average quarter, with growth around 2.5%. Enough to reduce the unemployment rate, but not enough to make up for lost ground from the financial crisis. The 5% savings rate reported today suggests that when Americans have a little extra money in their pockets, either from higher incomes or lower gasoline prices, they remain cautious, inclined to save it rather than spend it. Retailers can only hope that doesn't remain true when spending starts in earnest for the holiday season. The proposition that the U.S. economy is accelerating gets another chance to prove itself next week with important surveys on manufacturing and services. And then there's the much-watched jobs report. Economists looking for 200,000 plus jobs to have been created in the month of November. That's 200,000 more people with money in their pockets to spend for the holiday season. Have a great holiday. For Nightly Business Report, I'm Steve Leisman.
And as Steve just mentioned, there was also a round of housing reports out today, a triple dose of data, and it all tells the same story. Diana Olick has more.
The one thing not cooking with gas this Thanksgiving is the nation's housing market. New reads on October sales were disappointing. Signed contracts to buy existing homes fell unexpectedly, even amid a 5% jump in listings. It was the lowest sales pace since June and went along with a drop in mortgage applications during the month.
Largely dependent on interest rates and obviously what the macroeconomy is going to do in 15 and in 14 for the remainder.
Mortgage applications had surged at the beginning of November, but fell off again last week, even as 30-year fixed rates dropped below 4%. The realtors still blame tight credit for slow sales, but some say that's old news.
The biggest problem is stagnant income and no possibility of that getting better anytime soon. So people really feel nervous about the future, and I think that is what's making them not go and spend the big bucks on a house.
Another read on new construction was also disappointing. Sales for the builders were up less than 1% in October compared to September, but only because September's gains were revised down. Year to date, new home sales are nearly flat. The only jump was in prices, up a whopping 15% in October from a year ago to a record high. And million-dollar homes are seeing sales soar.
Just sold this house, another property in right across the line in Maryland, on in the low fours, and I've got 2 offers on that this week too. And right at Thanksgiving.
While the rest of the market falters, the high end is on fire.
With the market up, rates are down, and they just think, gee, could it be more next year? I should make this decision now.
The high end may be juicing the numbers for now, but there are a limited number of those buyers, barely 2% of the market. For housing to really start cooking, all levels of buyers need to have a seat at the table. For Nightly Business Report, I'm Diana Olick in Washington.
More now on the action or lack of action today on Wall Street. The major averages closed slightly higher on a low volume day ahead of the holiday, and in spite of all that mostly disappointing economic data. Still, the Dow was up 12 points to a new all-time high. It finished at 17,827. NASDAQ added 29, a 14.5-year high there. We so frequently say it. And the S&P up 5, new record close of 2072. So will they or won't they? Just one day to go now before a highly anticipated OPEC oil ministers meeting where member nations will vote on whether to cut production to try to end the 5-month slide in oil prices. And apparently, energy traders do not think a cut in crude prices is coming. As they settled at a fresh 4-year low today with domestic oil down 40 cents, it ended at $73.69 a barrel. Brent crude, the international benchmark, down 58 cents to $77.75 a barrel. Our Steve Sedgwick is in Vienna, Austria, with a preview of tomorrow's big OPEC meeting.
Here in Vienna, OPEC ministers are set to meet on Thursday for what is seen as the most highly anticipated meeting in many years. Of course, the price of oil has fallen aggressively, 30% since June as well, and OPEC is desperate to try and find some defense in that price, with the oil price now under $80 a barrel. And yet, who would do the cutting if there was an OPEC cut? And that's where a lot of dissension within the ranks and with other oil producers remains. The Russians came to town earlier this week and they said, yes, they would like someone to cut, but they weren't prepared to do so. Don't forget, the Russians are the biggest producer in the world, producing about 10.5 million barrels a day. So who would be doing the cutting? Well, it wouldn't be the Iranians. They want to put more oil on the market and are only prohibited at the moment because there are sanctions over their nuclear situation. So the shoulders who would have had to bear the brunt of that cut would have been Saudi and their GCC allies. And it looks like they are looking now to play the long-term game, i.e. they're not going to defend price, but what they want to do is defend market share. They're very concerned that shale producers and non-OPEC producers have been stealing market share as the price has come off, and they don't want to lose any more. It looks like we may, despite many people's expectations, actually get no cut in production in the next 24 hours. This is Steve Sedgwick in Vienna for Nightly Business Report.
And John Kilduff joins us now to talk more about the upcoming OPEC meeting. He's the founding partner with Again Capital. John, good to have you back with us. To cut or not to cut, what do you think they'll do, and what do you think's next for oil prices?
I don't think they've cut. I don't think they will cut. The Saudis have prevailed in their view that they need to hold firm, let the market stabilize, work its way out, and also draw a line here to try to squeeze out some of the higher cost competition out there. The very shale production that has brought prices down so much and the cartel to its knees potentially.
The last time you were here, you said that what you saw or were starting to see was the dawning of a price war, and that the Saudis were going to try and squeeze out and basically say, we can produce a lot more profitably at a lot lower price than you shale guys can here in the U.S. Is that what you're seeing?
Absolutely. You know, they tinkered with the price. They've been aggressively discounting. So have the Kuwaitis, particularly to China, to hold on to market share. And the Saudis are again, telling everyone, we can produce cheaper than the shale guys. Let's sit tight with this and squeeze them out. And to their credit, I've already seen several companies in the U.S. shale space announce reductions in their capital spending plans for next year because of what they're seeing as a lower price environment. So it may be already to the Saudis' advantage.
So we're at $73 now on West Texas on domestic crude. Where do you see that going in 6 months or so?
Well, I think the market's going to take this no decision to cut tomorrow badly, from a price perspective. It's going to head down 70, I think 68 over the next couple of weeks here, fairly rapidly, in fact. And then I think come the mid-first quarter next year, you'll see a price down in the low to mid-50s. Everyone's metal is going to be tested
low
this time
to
around.
mid-50s
Yes.
sometime early next year. For gasoline, what does that mean?
That'll translate into a national average potentially below $2 a gallon to maybe as low as $1.80 in areas.
Is this, on balance, good for America or not good for America, an oil price at that level, if it's sustained?
I still think it's unequivocally good. Ours is a consumer economy. 80% of consumer spending drives the economy. And this is a shot in the arm, a tax cut, all the various analogies that we come up with when this happens. And it is also a huge competitive advantage to our industry that are energy intensive, like the transports, but like heavy industry and other companies that have a huge energy input here. This is tremendously stimulative.
One of the other things you said, I believe the last time you were here, was that there are a lot of smaller producers in the U.S., the frackers who are out there who are A, highly leveraged, and B, do not have the capital behind them potentially to withstand oil prices at these levels. And you thought there was high risk for some of them.
There's most certainly high risk for some of them. What we've been finding out, however, is that their break-even point or their breaking point is much lower than maybe we thought. The range of cost goes from as low as $25 up to about $80. And they spread the cost of their fracking process over all the barrels that come out of the ground. So your incremental barrels get cheaper and cheaper. However, that is still going to be the worry. You've seen the sector get hit very hard, Tyler. I think it's going to continue to get hit very hard, and there could, in fact, be some bankruptcies. Some of my colleagues worry that this could be representative almost of a renewed financial crisis. I don't think it'll be that bad, but it'll $50 a barrel oil, like I said, will test everyone's metal. There will be some casualties. It'll range from smaller or more highly leveraged companies to Venezuela itself, which will likely default on their debt next year as a result.
Provocative words. John Kilduff, thanks very much. Happy Thanksgiving to you.
You too, Tyler. Thank you.
Thank you, sir. All right, business is really picking up at the ride-sharing service Uber after a new round of fundraising that reportedly secured at least another $1 billion in investments. That company that matches riders with drivers through a smartphone app now has a valuation estimated to be as high as $40 billion for a cab service. That's more than double the value in June and would make it more valuable than the likes of Twitter and Hertz. Now, whether you're in a car hopping or hopping in a car or on a plane or taking a train, the start of the annual Thanksgiving getaway is getting pummeled by a wicked East Coast snowstorm. It's making a mess of a lot of highways, delaying and canceling flights at some of the nation's busiest airports. But this year, there are millions of drivers getting an extra reason to be thankful. Phil LeBeau has more.
Traveling for Thanksgiving is never easy with crowded airports and highways. But this year, the estimated 41 million Americans driving at least 50 miles will be paying far less to fill up their car. Gas on average is selling for $2.81 a gallon, almost 50 cents cheaper than a year ago.
Gas prices being lower, it's really great. Really happy about it.
It has influenced my thoughts for going just about anywhere. Recently, with the gas prices where they are, I just go.
They're not alone. The number of people traveling for Thanksgiving is up 4.2%, the highest level since 2007.
And clearly, the economic picture is brighter this year than it was last year at this time. And it's helping to fuel consumer expectations and drive the increase in Thanksgiving travel.
It will be a messy trip for many due to a winter storm churning its way up the East Coast. But Amtrak says it's ready for the snow and cold.
We're going to be able to operate. We see that there's snow probably from North Carolina all the way up on into New England, but we believe that we're going to be able to operate and move people, and we appreciate the fact that it'll be difficult for all the travelers.
That includes 3.5 million Americans flying for Thanksgiving. Overall, airfares are slightly higher this year. And yes, those who waited to book tickets are paying more to fly over Thanksgiving.
We looked at actually bookings the week of Thanksgiving or just the week before Thanksgiving versus advance bookings, and prices tend to go up around 9 or 10%.
Regardless of how much people are spending to travel this holiday weekend, they all have one thing in common: the chance to spend Thanksgiving with family and friends. Phil LeBeau, Nightly Business Report, Chicago.
And coming up, nearly $500 billion in tax breaks for business are on the table, and with little more than a month to make them permanent, the president threatens to veto. What now? We'll take a look. The administration is looking to clear the air by tightening regulations on ground-level ozone, which has been linked to some serious health problems. A new proposal from the EPA, which won't be finalized until October, would lower current ozone emission limits coming from autos and power plants. But industry groups and congressional Republicans say the stricter rules would mean higher costs for businesses and would place a heavy burden on the U.S. economy. Well, something a lot of Republicans and Democrats seem to agree on: passing a so-called tax extenders bill, which would lock in nearly $500 billion in permanent tax breaks for businesses. But President Obama has already threatened to veto the legislation. Our John Harwood joins us from Washington with more. John, good evening. What is in this bill, and why would the president veto it?
Tyler, it's a $450 billion over 10-year bill of renewals of things like the research and development tax credit, expensing, depreciation for small business, things that every year Congress knows they're going to extend, and they are this time again too, but they don't do it on a permanent basis in order to preserve something that will be an engine to take other legislation through Congress. It's kind of a game, but Washington has not decided to get rid of the game. Now, what happened is the Democrats and Republicans negotiating, and the Democrats knowing they're losing control of the Senate in January to Republicans, negotiated a deal to make some of those tax breaks permanent. That creates two problems for the administration. One is it lowers the amount of future revenue the government's going to have, so that if we do a tax reform deal that is revenue neutral next year, that means the government is starting from a lower base, won't have as much money to fund all the things the president believes they need. The second is what gets permanent status. And the things like the research and development tax credit would be permanent, but the earned income tax credit, which goes to low-income working families, would not be made permanent. Liberals and the president say no go.
Is any of this dispute tied up in what the president did last week on immigration? That's number one. And briefly, number two, I thought that the deal that had been struck had been in part negotiated by the Democrats' own Harry Reid, the current majority leader, soon to be the minority leader.
That's right. And this reflects the fact that they're at odds, reflects some tension between, of course, the Senate Democrats, who just lost their majority, and a lot of their members blame President Obama, and the White House. The difference for the administration is that some of these tax breaks, like the earned income tax credit, by not being permanent, that represents a rejection of Democratic priorities, and the president simply says he can't live with that, and that means they're going to go back and have to negotiate a different package. But these extenders will eventually get passed.
All right, John, thank you very much, and happy Thanksgiving to you.
Same to you.
All right, shares of Deere dipped on a shaky forecast, and that is where we begin tonight's market focus. The farming equipment maker posted fourth quarter results that were stronger than Wall Street figured on, but the company said its revenue and profit will keep falling in the new fiscal year as sales for its products remain weak. The stock down nearly 1%, $86.99, the finish there. Sigh of relief for football fans who are Dish subscribers. CBS and Dish have agreed to another extension of their contract talks, meaning no CBS blackout over the Thanksgiving Day weekend. This is the second contract extension in 6 days. CBS shares down a fraction to $54.20. Dish 2.5% higher. They finished at $78.24. Bristol Myers Squibb says the FDA declined to approve the use of its experimental Hep C drug, which would be used in combination with other antivirals. The company wanted to market the drug with another experimental medicine that it abandoned in October because of competition for more potent rival drugs. Now, despite the rejection, shares there of Bristol-Myers up about 0.5% at 58.86. And one of today's big movers, Seadrill, that stock plunged after the Bermuda-based offshore drilling contractor reported earnings that missed some analyst estimates. The company also said it was suspending dividend payments to cut debt. Investors were not happy about that, not at all. Shares fell almost 23% to $15.99. Shares of GoPro took off after reports the company is launching its own line of consumer drones with high-def cameras attached. The company plans to sell the new devices late next year for between $500 and $1,000. The stock up about 6% to $79.05. Well, there's no avoiding it. It's Christmas creep, the pressure from retailers to get consumers to do more holiday shopping and do it earlier and earlier and earlier each year. But are consumers taking the bait? And does the strategy even work for those stores? Courtney Reagan now with a look.
The holiday shopping season unofficially kicks off Friday. Or is it tomorrow? It's gotten harder to pinpoint the start of the holiday season with the Christmas creep moving earlier every year. It's all about market share for retailers and what it takes not to lose it to a competitor. The ultimate early bird gets the worm. It's always been competitive. Retailers sell discretionary goods, so convincing consumers to buy non-vital items is a feat in itself. Add in the Great Recession and the influence from online shopping, which never closes, and the holiday dollar fight got even hotter and never cooled off.
It is a fight for market share. I think what's occurring is that the retailers have recognized that with this every dollar counts economy, that they must in fact bring shoppers into the stores as early as possible. Christmas creep is actually changing the shopping experience as we know it. So shoppers have learned that they are going to search for deals, they're going to search for prices, they're going to search for availability early in the season to sort of war game where they're going to shop this season.
Kmart started running TV commercials about holiday layaway in September that, while poking fun at the Christmas creep, were in fact holiday commercials before back to school wrapped up. Target offered Black Friday deals on November 10th and have had various deals since. In 2012, Macy's experimented with a midnight opening on Thanksgiving. It worked, so other retailers began to pull Black Friday doorbusters forward to Thursday night, and now it's a game to see who makes what move first, then everyone piles on. And shoppers are responding. IBM says online sales the weekend before Thanksgiving increased nearly 19% year over year, and the National Retail Federation says nearly 55% of Americans began holiday shopping in early November or before. Many consumers do refuse to shop on Thanksgiving, but last year an estimated 45 million Americans did shop on Turkey Day. And of those planning to shop on Thanksgiving this year, the majority of them did it last year too. Most retailers pay overtime, offer meals and extra discounts for employees in addition to asking for volunteers for Thanksgiving hours. JCPenney's CEO Mike Ullman says the store employees voted to open at 5 p.m. on Thanksgiving, so they could be earlier than competitors. While it's debatable whether earlier deals add to total sales or simply shift the timing, experts don't expect the Christmas creep to ever really retreat. For Nightly Business Report, I'm Courtney Reagan.
Up next, need help in the kitchen? Well, we'll show you a high-tech assistant for whipping up that Thanksgiving meal. Thanksgiving is just a day away, of course, and you can almost smell the turkey roasting right now, unless, of course, you can't cook. But, of course, there's an app for that. Jane Wells has more.
I think I'm charring the Brussels sprouts rather than browning them, but we're going to go for it.
If cooking in the kitchen this holiday leaves you feeling sliced and diced, there's an app for that. More on that in a minute. It is that time of the year where we spend time in the kitchen and spend money to be there. But the American Farm Bureau Federation says food inflation is having little impact on Thanksgiving. The average turkey dinner for 10 will cost $49.41 this year, only 37 cents more than last year.
In fact, the turkey is a little cheaper this year, and you might want to also consider turkey for Christmas because if you try a roast, it could roast your wallet.
The federal government now estimates sky-high beef prices, already up over 11% this year, will rise another 5% in 2015. This even as the cost of feeding cattle stays low. Why the disconnect? The USDA believes beef producers will feed cattle longer to fatten them up and also hold back cows as they expand herds.
Add the garlic and saute for 1 minute until fragrant.
Back to help in the kitchen. That new app is called Side Chef, which talks you through recipes with pictures and audio cues. It's kind of like a GPS, created by former game developer Kevin Yu, who grew frustrated trying to cook with other apps.
Set up my computer, had like YouTube running at the same time, and I was like trying to open up all these different things and like cooking, throwing in, ingredients, and it all kind of came out. It looked somewhat similar to the photos, but honestly, it was a big mess.
Add the crushed red pepper flakes, 1/2 TSP, and salt, 1 pch, to the sprouts and cook.
I tried it out on a challenging side dish with farro, prosciutto, and Brussels sprouts.
Well, I burned the garlic, some of it, but I'm going with it.
Despite my shortcomings, the result?
Wow.
A definite improvement. Now if I can only figure out what to do with a turkey. For Nightly Business Report, Jane Wells, Los Angeles.
And finally tonight, if cooking a Thanksgiving dinner isn't for you, the Old Homestead in New York City is offering what it calls the most expensive feast in Thanksgiving history. 9-course extravaganza, foie gras stuffed squab centered around an organic turkey dressed with imported ground Japanese Wagyu beef. Sounds delicious, but so does the price tag, $35 grand for 4 people. That's Nightly Business Report for tonight. I'm Tyler Matheson. Thanks for watching. Enjoy your Thanksgiving. We'll see you back here tomorrow.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. A feast of mostly disappointing economic reports were released today ahead of the Thanksgiving holiday, but investors still managed to push the Dow and the S&P 500 to fresh all-time highs in light trading. Among that data, business investment fell in October, jobless claims spiked a bit higher last week, and both new home sales and pending home sales were lower than expected last month. But another report showed that consumer spending and personal incomes were slightly higher in October, and Americans are saving more. At the close, the Dow was up 12, the Nasdaq added 29, and the S&P 500 higher by 5 points. Oil, though, fell to a fresh 4-year low as traders don't think OPEC will cut production levels to stop the steady slide in crude prices. And tune in to Nightly Business Report right here on your public television station.